Ladies and gentlemen, good day and welcome to the KPR Mill Limited Q3 FY23 conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over to Mr. Abhishek Nigam from Batlivala and Karani Securities India Private Limited. Thank you and over to you.
Hello everyone, good evening and welcome to the third quarter FY23 earnings call for KPR Mill. Today we are joined by Mr. Murugappan, who is the CFO, and Mr. Kandaswamy, the Company Secretary for KPR Mill. Mr. Natraj, who is the Managing Director, was supposed to join us today, but unfortunately he had to cancel at the last moment because of some urgent travel plans. And now, without any further delay, I will hand it over to Mr. Murugappan for any opening remarks.
Good afternoon, everyone. I am Murugappan, Chief Financial Officer of KPR Mill Limited. I welcome you all for the KPR Mill third quarter earnings call for the financial year 2023. With me, our Company Secretary, Mr. P. Kandaswamy, also. The brief background of the industry. The Indian economy is reported to continue its fast-growing economic status. The Indian textile industry is optimistic of repeating growth in financial year 2023 also. Despite adverse factors like global recession, Ukraine war, volatility in cotton prices, higher inflation, etc., FTA with the significant markets like UAE, Australia, FTA with the UK, Canada are likely to create market opportunity for entire textile value chain in India. The government is also focusing on policies to make industry globally competitive. KPR is happy to announce a good performance in the third quarter of financial year 2023 also, overcoming the challenges the industry is facing. The fluctuation in prices has been putting pressure on yarn margin. With the garment order position continues to be encouraging and the cotton prices have been started stabilizing, we hope to have a better performance in the current quarter also. To improve its performance further, the company is contemplating into certain modernization and expansion plans, which the board has approved in the recent board meetings. Expansion of ethanol capacity in KPR Sugar Mill Limited. We propose to increase the ethanol production capacity in KPR Sugar Mill Limited from 130 KLPD to 250 KLPD at a project cost of rupees 150 crores. This project will be funded through internal accruals and term loans. The project is expected to complete by financial year 2023-24. The project is eligible for interest subsidy under the ethanol augmentation scheme also. Second, the vortex spinning mill. The company proposed to set up a vortex spinning mill for viscose yarn production with an estimated project cost of rupees 100 crores. This project is expected to complete by the financial year 2024 and the entire project cost will be met through internal accruals. 3. Solar power plant. We propose to set up a 12 megawatt solar power plant for captive consumption with a total cost of about rupees 50 crores. This project cost will be met through internal accruals. The project is expected to complete this year, that is 31/3/2023. Expansion of processing and the printing division. The company plans to increase the production capacity of its processing and printing by debottlenecking the process, which will increase the production by about 20%. The total project cost of rupees 50 crores will be met through internal accruals. With this expansion, we hope that the next year's increase in turnover and profitability will be improved. Now the floor is open for questions.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question on the line of Kapil Jagasia from Nuvama Wealth Research. Please go ahead.
Thank you for taking my question. So my first question is on the demand environment. How is that shaping up?
Demand is comparatively better. Only the margins in yarn is little skewed. So otherwise, demand-wise, both yarn and garments is doing well.
Okay, so like how much margins yarn would have made this quarter?
It's about 14%.
Okay. And sir, in terms of garment segment volumes, they have increased by around 10% on the 9M FY23 basis. So, my question is, even with increased capacity, the increase is only 10%. So, are we facing any export slowdown here in garment, or the order book has shrunk? Like, what would be the order book position also over here?
Order book currently is about 1,000 crores. The garment turnover is in line with the estimates because the new factory ramping up is done in the first 9 months. So we hope that it will improve in the current quarter, and it is in line only.
Okay, and can you please help me with the sugar and ethanol sales breakup for this quarter?
Sugar and ethanol sales you are asking?
Yes.
It's about 619 crores.
For this quarter?
It's, yeah.
Okay, sure. Thank you so much.
Excuse me, sorry. Sugar and ethanol sales number is 252 crores. For the year is 619 crores.
Okay, and the breakup would be between sugar and ethanol?
Yeah, I'll tell you. Sugar sales is 60 crores, 63,000.
Okay.
Yeah.
Fine. Thank you so much.
Thank you. We have the next question from the line of Muthu Kumar from Fidelity Venture. Please go ahead.
Thanks for the opportunity, sir.
Thank you.
I have 3 questions.
Yeah.
First, most of the CapEx you have told, but in your annual report you have mentioned CapEx is planned at Chengapalli Garment Unit. Could you please clarify what is the quantum of CapEx intended in that Chengapalli Garment Unit?
The Chengapalli Garment Unit expansion is completed in the last 2022 March itself. Total project cost is about 250 crores.
Okay, sir. Okay, sir. Next question is what are the steps taken to tackle cotton volatility?
Mr. Muthu Kumar, sorry to interrupt you, but your audio is not very clear. Request you to kindly go off the speakerphone.
Okay. Can you audible?
It's still sounding very distant.
Now it is.
Yes, this is much better.
Okay, sir. The second question is, what are the steps taken to tackle cotton volatility and prices, and when you can expect the demand momentum for cotton and spinning picks up?
Demand-wise, there is no issues. The movement of goods is good only. Only the margins are fluctuating. That's why we are keeping a very low inventory. Say 2 to 3 months stock we are maintaining to avoid the high fluctuation impact.
Okay. So in the preceding season, what will be your major focus? Sugar or garment export or cotton yarn?
Which one, sir?
In the forthcoming session, what is your major focus? That is in sugar or in garment or in cotton yarn?
Sir, all are part of the business only.
Okay, sir. And what is the expected integrated EBITDA margin?
Sir, currently 9 months is about 23%. We hope that we will be doing around that level.
Okay, sir. Thank you. That's it.
Thank you. We have the next question on the line of
Call
Pratik
recording has
from Unique Portfolio Managers. Please go ahead.
Hi. Good afternoon, sir. Sir, earlier we had mentioned that by quarter 3 we intend to completely ramp up the new capacity which we have put up. But if you look at the numbers, we have manufactured about 32 million units, and if we ramp it all up, it should have been 38 odd. So is this, any reason for this?
No. Currently, the production capacity is more or less reached. We hope that we will be doing somewhere around 35 million garments per quarter.
Sorry, how much? 35?
35 to 36 million garments per quarter.
Okay. And sir, what would be our margins in garment for this quarter?
This quarter is about 21%.
Okay. Okay. And you said the excess inventory, the high price inventory that we are carrying in yarn and fabric, that is done now, and the margins are back from, say, this quarter.
Still the fluctuation is very high in cotton, so the margins are skewed only, but we hope that it will stabilize this quarter.
Okay, sure. Thank you and all the best.
Thank you.
Thank you. We have the next question from the line of Chinmay Shah, an individual investor. Please go ahead.
Thank you, sir, for the opportunity. Am I audible?
Yeah, you are audible.
Yeah, sir, we have planned for new capex by the next year, right? So what would be the approx revenue being targeted for the same?
Sir?
What would be the approx revenue generation from the new capex?
Sir, actually the sugar division, there would be an increase in revenue of about 50 crores because sugar will be converted into ethanol.
Yes.
And, but the margins will be very good. And the Vortex, we expect a revenue of about 100 crores from 2024-25 onwards because it will be completed in 2024 only. So our solar power plant will give a cost saving of around 12 crore rupees per annum. And the processing division capacity will increase by 20%. It will be internally consumed.
Fine, sir.
Yeah.
Okay, sir. One more thing, sir. I think from January onwards, our yarn margins are still, as of December, like 14%, or it has been started in upside?
January more or less in the same kind of 14-15% only. Okay. We hope that it will improve in the coming months.
Fine, sir. And sir, how about our Europe and US order book for garments?
Garment order book is healthy only. We are currently running with the order book of about 1,000 crores.
Okay, sir. Thank you.
Thank you.
Thank you. We have the next question from the line of Yashvardhan Sinha from MIPL. Please go ahead.
Hi, can you hear me?
A little louder, please.
Hi, can you hear me?
Yeah, tell me, sir.
Yeah, I basically wanted to understand what the impact on the business would be with the FTA with the EU that's upcoming.
Sir, EU FTA is not expected now. We are expecting FTA with UK.
Okay, and what would the impact on the business be with that?
We hope that the business with the UK will improve by about 10-15% immediately. In the long run, it will give a benefit.
Okay, thank you.
Thank you. We have the next question from the line of Aman Agrawal from Carnelian Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. I had a few questions, starting first on the depreciation. So, like, if I see our depreciation charge for this quarter has declined by around 21 crores. Like for last quarter, it was 50 crores, but for this quarter, it is 29 crores. So, any reason why that has happened? Because when I look at the standalone numbers, it has remained more or less similar, right? Around 19 crores in standalone for last quarter as well as this quarter. But in console, it has declined by around 21 crores. So, why is that?
It's basically, sir, some of the assets in the sugar business is completed its life, where there is some capital subsidy also standing there with some underlining conditions. Both are met, so that has been the subsidy has been written off and the depreciation also will be over from this quarter.
Okay, sir. So going forward, we should see a 30 crore kind of depreciation run rate for all the quarters, right, sir?
From this quarter onwards, there will be some more depreciation in some of the capital expenditure incurred during the year. Not
Okay.
exactly, maybe some more depreciation will come from this quarter, around 40 crores.
Okay. Got it, sir. So my next question was on the sales volume. Like in this quarter, we have done somewhere around 29 million pieces in garments volumes. And when I look at in 9-month basis, we have done somewhere around 91 million. But when I look at the production number, we have been producing around 32 million for the last 2-3 quarters. So in terms of production, we have been producing more. So what is impacting the overall sales volume pieces for us? That was number one. And second, given the prices of cotton has now come down, like, so when we have this garment inventory with us, so like going forward, will it realize at a lower price, or will we be able to sell it at a higher price, like given the contracts we have with our customers?
The garments are produced based on the orders only. Prices are all already fixed. In that price only it will be supplied.
Right.
As well, no, most of the garments are produced with a higher cotton cost only, because during the period we confirmed it, fabrics are all manufactured and dyeing also done. So we may not get much of the price benefit out of it, because already orders are confirmed, forwards are also been booked for that.
Right. So, and the reason for this lower sales volume compared to production volume, sir?
Some small difference usually there, sir. When the quantity goes up, there will be some stock. Generally, fourth quarter volumes generally is higher. We expect that it will be.
Got it, sir. In terms of the new plant ramp-up, sir, how much capacity utilization have we achieved in the new garment facility, if you can talk about that?
Yeah, more or less we have achieved the full capacity, sir. We are expecting a production from this quarter onwards. Full production will be from next year.
Got it, sir. And so in terms of new capex, like we were talking about ramping up the full capacity of the existing plant before going for a new capex. So since it is now almost fully ramped up, so how are we thinking about the new capex, and when we could decide about putting up another garment facility, given our focus is to shift towards garment in future, sir?
The garment production expected to be full in the coming year. We are just watching the market because of this Ukraine war and slowdown in Europe and all. And also we are looking at the new government policy for this Mudra scheme and all. Just we are waiting for some time to take a call on garment expansions. We are expanding the other businesses as I spoke about it in the earlier commencement of this call.
Understood, sir. Thank you. I'll join back in the queue, sir. Thank you.
Yeah.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Sanjay Dhanuka from KPR Mills. Please go ahead.
This is regarding to the standalone business. I see one item in quarter 2, that is purchase of stock in trade, 137 crore. But there is no such item in last year as well as this quarter. What is that one, and whatever purchase is, whether that has been disposed or sold or not? It is still in the stock.
Yeah, it has been sold, sir. Some of the some of the job works and done for the garment when the ramping up was little slow. It is not there now. Our factory is fully running now.
Okay, thank you.
Thank you. We have the next question on the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the opportunity. So just wanted to understand the cotton procurement policy, given the volatility in the cotton prices. What will be your strategy for this season?
We are trying to keep as low as possible in the cotton inventory unless the prices are getting settled. Now we are carrying only 2 months stock. We hope that we will be doing it for some time from now. If the prices reaches to certain level, yeah, somewhere around 60,000, we may go for a little higher stock.
Okay. And so my second question is on sugar profitability. This quarter you did 33.5% odd EBIT margins in the sugar segment. what should we, assume for full year, or what should be the sustainable margin in the sugar business going forward?
So generally, during the season, the margins would be little higher because of the higher power production in the sugar unit. It is in a full year basis, we are expecting somewhere around 22 to 25% kind of a margin there.
EBIT margins or EBITDA?
EBITDA.
EBITDA. Okay. Sir, this quarter, could you just give me the sales breakup between sugar and ethanol? I missed that number when asked earlier.
I'll tell you. The last time also I have not informed. Sugar sales is 115 crores.
Okay.
Ethanol is 102 crores.
Okay. And rest will be power?
Yeah, power.
Okay, understood. And sir, in terms of garment business, this quarter we had seen a little lower margin at 21%. What should be sustainable margins for the garments business as well?
So 9 months period, if you look at it, is about 24%. We hope that it would be somewhere around 22 to 24% would be sustainable.
Okay, okay. And sir, in your presentation, Australia revenue share has been declining since FY21. Could you give some color on that geography, how we are faring and what are we doing there?
Since the revenue from the garment business is growing, because of that it's showing a little less in the percentage wise. Otherwise, the business is more or less equal only.
Okay, okay. Understood, sir. Thank you so much. I'll come back to the question queue.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Prerit Chaudhary from Green Portfolio. Please go ahead.
Yeah, so I have some questions. So the first one is, so for the last 2 quarters, we have been seeing some negative changes in inventory. So are we seeing some big orders in the next quarter that we are going to fulfill?
The garments?
Yeah, overall, in the consolidated results, we are seeing negative changes in inventory for last 2 quarters. So I just wanted to understand, are there any big orders that are coming up that needs to be fulfilled in the Q4?
Not like that, it's the regular orders only. Because of the inventory, prices are going up in the last 2-3 quarters, the negative inventory is showing. Otherwise, it's the regular stocks only we are carrying. Because earlier the cotton price used to be some 40,000-50,000 rupees. Now it touched somewhere around 1,05,000 rupees. Now it's trading around 65,000-66,000 rupees now. Because of the higher inventory cost, it shows a higher inventory negative.
And also in the textile segment, if we see the raw material prices have started cooling down, but our margins are still affected in the profit EBITDA levels. What has been the reason for the thing?
Sir, it is even though the prices of cotton has come down substantially, the demand also more or less in line. But the price is not going up because the export demand is not there. So all the yarn manufacturers are coming to domestic market. Otherwise, India is a yarn surplus country. We used to export about 40 to 50% of the production. Now everybody coming to the domestic market since the domestic export market is very slow.
Okay, all right. And so the next, so in Russia, what has been the impact of the Russian-Ukraine war, and also the economies like Bangladesh and China have been taken a hit in their textile industry. So are we seeing any benefit that we are getting new customers or more orders from the international companies?
Still there is no such things are happening. We hope that it will happen, but still we are waiting for some changes in the international market.
Okay, so there's no currently any impact that the company is seeing from this?
There's no.
Okay. And what is the current capacity utilization of our ethanol plant?
It's fully utilized, sir.
Yeah, capacity.
The ethanol plant is fully utilized.
Okay, fully utilized. And what has been the reason? I mean, our EBIT has grown significantly compared to the previous quarter for the sugar and ethanol. So what has been impacting that?
I cannot with you. Can you come again?
Our EBIT margins have significantly grown compared to the previous quarter for the sugar.
This third quarter, the sugar season starts. In the first and second quarter, it's off season. Third and fourth quarter is the sugar season.
All right. And if you can give guidance, what kind of top line or margins that we can expect for the next couple of years with all these capacity expansions that we are doing and ramp up of our garment facility?
So we try to achieve a growth of 10% on a year-on-year basis.
Okay, 10% growth. And for the margins?
Same way.
Can you repeat? I was not able to hear it.
Yeah, same way we are expecting the margins also.
All right. And are we expecting planning any demerger as our sugar and ethanol business is also growing? Do we plan to demerge the business in the future?
Immediately, we do not have any plan. Anyway, we will take up this with the board also for discussion.
All right. Thank you. That's it from my side.
Thank you.
Thank you. We have the next question on the line of Vikas Jain from Equirus. Please go ahead.
Yes, sir. Thank you so much. Sir, can you please give a breakup between our yarn and fabric sales for this quarter?
Yeah, I'll tell you, sir. Yarn sale quantity is 15,000 tons. Fabric sales quantity is about 1,700 tons.
Okay.
You want the value also?
Yes, sir. Value also, please.
Yarn value is 450 crore.
Okay.
Fabric is 55 crore.
55 crores. Okay. Sir, I want another color with respect to the demand from the overall Europe and North America market. What are the trends that you're witnessing with respect to any signs of any slowdown or any market share gains that we are witnessing from any other competing nations? Just some more color with respect to the order side that we have, order book that we have. What is the comfort level and your long-term visibility with respect to the order book and the demand from these markets, since the conditions are quite volatile as on date?
As you said, there will be some volatility in the market, but we are operating in a different segment. We are operating in a regular garment and basic garment segment. We are not seeing much of a fluctuation in the demand for the product. We are operating with the order book of about 1,000 crores, maybe somewhere around 5-6 months kind of order book we are maintaining continuously. We are not seeing any drop in the order. We hope that it will not have much of an impact.
Correct. But any down trading or shifting to any lower ASP or any such trends visible, or like it is just as normal as it was earlier?
It is normal as it is earlier.
Okay, sir. Thank you so much, sir. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Pratik Tholia from Systematics. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, just a couple of questions. Firstly, on the sugar side, can you help with the sugar sale volumes for the quarter and whether there was any exports also in sugar this quarter?
Yeah, it's about sales volume is about 42,000 tons, out of which 20,000 tons is export.
20,000 tons is exports.
Yeah.
And sir, what was the average realization in the domestic and in the export market for us?
Sir, we have consolidated average realization only. It's about 33.5 rupees per kg.
33.5 rupees per consol realization.
Yeah.
Fair enough. But the export would be higher than this, I'm sure.
Little higher, because we are exporting raw sugar, it will be little higher.
Okay. And sir, what is our total export quota this year that we've got?
It's about 27,000 tons. 7,000 tons will be done during this quarter.
Okay, 7,000 in this quarter. And you can, has it been contracted? And if yes, then at what price?
The contract already been done, somewhere around 35 rupees per kg.
35 rupees per kg. Sure. And sir, what was the ethanol volumes for the quarter? And if you can give the split.
Liters.
Sorry?
It is about 1,58,000 liters.
1 lakh?
58,000. 1 crore 58 lakh liters.
1 crore 58 lakh liters. Okay. And sir, if you can split it between how much was from B heavy and how much from juice?
It is juice. No? During the season, it will be juice.
Okay, so we are doing only juice during the season.
Hmm.
And sir, are we putting up any grain-based facility also? Because after the season, how do we plan to run our ethanol capacity?
After the season, the capacity will be run through molasses.
Through molasses. Okay. And so what would be our average days of operation for the distillery?
300 days.
300 days. And how much would be, season typically, 3 to 4 months will be juice and remaining will be molasses.
Yeah. It's about 4.5 months to 5 months will be juice, and the balance 5 months will be molasses.
Molasses. And so no plans for getting into grains as of now?
No. Because our capacity is more or less equal to the molasses production and the juice conversion.
So this expansion that you're doing, what is the feedstock for that?
Oh, it is again same juice and molasses only.
Okay, so but we have incremental. Sorry?
As I told you in the earlier, the first plant we have set up only 130 KLPD ethanol plant. Whereas in the second plant we set up about 220 KLPD ethanol plant. Now we are expanding the first plant from 130 KLPD to 250 KLPD, more or less equal to our capacity only.
Okay. So post this expansion, we will be fully utilizing our molasses.
Fully utilizing. Some molasses now is being sold, that will be fully utilized.
That will be internally used. Understood. And sir, just wanted to understand what are the recovery rates for us, because our margins seem to be much superior compared to the companies, especially in UP belt. Whether our recoveries are higher, because I think even Karnataka government had announced some 100 rupees per quintal increase in the fee. So despite the higher cost, just wanted to understand on the margin front, what has led to this margin expansion?
Basically, power and ethanol is giving more margin to us, because we are one of the few companies where the company having a full ethanol capacity. Because of that, the margins are higher, and also we have a higher power capacity. We have about 90 megawatt of cogen power. So both are giving advantage to us.
Okay. But sir, how are the recovery rates right now in our catchment area?
It is somewhere around 10.5 to 10.75.
That is gross recovery.
Yeah, gross recovery.
Okay. Right, sir. If I have any question, I'll get back. Thanks for answering, and wish you all the best.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Jinesh Shah from Congo Commodities. Please go ahead.
Hi, sir. Thank you for the opportunity. I just had one question regarding what would be the yarn which is cotton and man-made. What would be the percentage of cotton yarn and versus man-made yarn that we have?
So presently, man-made yarn is very negligible, very small portion. It's about 95% is cotton yarn only.
Right. Okay. And so one more question regarding FASO, sir. How are we ramping up the distribution, and what is the future prospects for FASO? What are we planning?
Now the ramping up is good, going well. We hope that we will reach to a break-even level in the coming year, 2023-24 kind.
Right. Most of this distribution happens via online or via offline channels, sir?
Mostly offline. Online also there.
Right. Okay, sir. Thank you so much.
Thank you.
Thank you. As there are no further questions, I would now like to hand it over to the management for closing comments.
Thank you very much for attending the KPR Mills quarter 3 earnings call. Thank you once again for attending the call.
Thank you. On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.